We have Ayesha and Victor. Please come to the stage. And we are waiting the connection with Sam. And hopefully, is it already possible to put him on the screen? No, we'll just go ahead. First of all, welcome to this panel. Let me introduce the topic to you. This is about institutional market making, what it is all about, and the trends and obstacles. Could you first give a short introduction on who you are and the company you work for? Victor, can I give the word to you?
Absolutely. Glad this thing works. Hi, I'm Victor. I'm a co-founder and CTO of the Hashflow project. And just for more context on why this is relevant for this talk, Hashflow is a decentralized exchange, but the main difference between Hashflow and most other DEXs that I've seen is that we actually leverage institutional market makers and liquidity for our RFQ protocol. So, glad to be here.
Okay. Nice. Ayesha.
Hi, my name is Ayesha, and I work at LedgerPrime. We're a multi-thread hedge fund, leading market makers on Hashflow. And aside from, at LedgerPrime, I also teach blockchain at NYU Tandon.
Okay. There's quite some background knowledge. Could you please be a bit more quiet? Thank you very much. So, institutional market making, that is a big topic. And I think on CeFi, very well developed. And on DeFi, it's a thrilling topic as well. So, next to this personal introduction that you gave, can you explain to the audience a bit how this ecosystem looks like, what your role is as a company, how you see yourselves playing a role in this area of market making? Ayesha, can you give?
So, market making on DeFi works exactly like market making on CeFi, which works exactly like traditional finance. The only benefit, and the biggest benefit, is that on-chain settlement and on-chain transactions are way much more faster than what we've seen in the past. I think that DeFi does have a lot of promises to uphold, and it is a very promising technology, given, like I said, the on-chain part. But as far as the marketing element go, the invention of like AMMs, or what these guys do, RFQs, they were the first one to do it. Order book, there are plenty of examples around. Those are the innovative parts of DeFi. In CeFi, it's been traditional, right? Like order book, you take the maker market, you take the taker market, and then, you put, capital in one or the other.
And maybe and how do you see your role in this ecosystem?
Sure. So DeFi, as it evolved, it proved, just like one of the previous speakers saying, it proved that the systems work. And I believe 2020 is when people realized, like, hey, this thing is getting serious, and we can actually create financial systems based on better foundational principles, right? However, the decentralized exchange protocols that we've had so far in DeFi, at least when we started Hashflow, we realized they had a lot of problems that were preventing DeFi from scaling. So we're talking about MEV slippage, and particularly very low capital efficiency. That's how you saw the DeFi 2.0 movement that started with a huge focus on capital efficiency. So we started from there, and we said, hey, how can we unlock DeFi? How can we make it scale to the point that it matters in the real world? And our solution to this, or at least our approach to this, is institutional market making. Plugging institutional market making into native DeFi protocols creates a hybrid model that enables for way more capital efficient structures, enables for more exotic assets to be priced and so forth. So that's one side of the story. We're working on those problems that historically those protocols have had. But at the same time, this was also briefly mentioned in the previous talk, I believe regulation is coming, and I don't think the system can thrive without regulation, without KYC. At the same time, all these things are going to be optional, dependent on the application, right? So we built Hashflow with a very, very flexible model in mind to enable these regulators to integrate into DeFi, and with that, enable more institutional liquidity and more institutional involvement in the space.
Very, very interesting. And let us come back to that topic of regulation later on. And so what I find about market making, it is a thrilling topic. And when I was asked to moderate this session, I wanted to share some thoughts from my own experience. I work for Mathrix. Mathrix is a new name in the space for some of you, but it has a long history. We're one of the crypto-native algo prop trading firms, started in 2013, now moving on to 24/7 coverage, handling 3,000 pairs continuously and being on the top of the leaderboards. But what you also see is a choice that you have to make as a company. Do you stay as a specialist, or do you expand the number of services as a liquidity provider? So for instance, sharing your knowledge, helping with listings, protocol research, things that we have been picking up. We have made the choice to go to become, basically help the ecosystem and support this Web3 ecosystem. How do you see this? Do you see the role of a specialist company, being good at what you do, or do you see that you want to expand your services to more wider range?
So I'll just give an example. In 2020, so the fund itself started in 2017, just wanted to make markets on BTC options. That was the only market existed back then, and spot arbitrage. In 2019, more markets opened up. In 2020, we started investing in DeFi. And right now, we have about 55 principal investments, right? But most are trading, infrastructure, DeFi, a lot of options protocols, a lot of derivative protocols. And we find ourselves in a very unique position because we have the technical capability and we have the financial capability on go and just make markets on the investments we've made as compared to a very traditional VC. Yep. So, and we've started for past 6 to 8 months or so, we see projects where they say that they'd rather not allocate a particular VC and allocate us because they want someone to come and trade on these markets, right? And make markets. Yep. So yes, obviously there's no shortage of capital in this space. There's no shortage of, huge size of valuation checks in the space. But there is a huge demand of traders and liquidity providers, and someone to come and tell you that this is the infrastructure you can put it into place by implementing this strategy. Something that we've been doing with Hashflow ever since day one. So yeah, there's a huge demand for that.
Victor, any additions to that?
Well, as a startup and as a new company, obviously, we have the ambition long term to satisfy any assets on any chains and so forth, right? So we really think of this as reinventing DeFi as a trading and experience as well as a liquidity provision experience. But we have to we had to start specialized. So when Hashflow first launched, we had native Ether to USDT swaps. And that's the only thing we had, and on Ethereum mainnet. But it cost 50% of gas of Uniswap, and it was there were all trades with no slippage. So we kind of try to work on that. Now, as we expand, we look at different directions. So that's, as of recently, we've been on Avalanche as well as other chains. So again, there's a lot of opportunities, but from a startup point of view, you kind of have to stay focused on creating value first and then expanding that.
And one of the topics that you already mentioned was KYC and regulation. And I think that the topic is already there, it's coming up. US and the EU are coming up with more and more regulation and plans, and we do not know exactly what they will entail, when they will be active, etc. But it will be probably, if you look at the audience, at the back of our minds. Regulation, how it will maybe impact liquidity provision. What are your thoughts? Do you see this as an opportunity with, for instance, recognition as the market, as a market that it will stay here, or as also an opportunity for more institutions because they like the trust and security of regulation, or is it a threat? And is it basically blocking innovation? What is your view to that?
We're an offshore entity, and most of the funds that you probably talk to are offshore. That basically means we're based out of Cayman or Singapore. We are registered there as well. But coming back to US, we're a CPO. We're about to be SEC registered. Personally, and frankly, I think regulation is a great thing because it's going to filter out some capital, but not a whole lot. It's just it's going to put some KYC and AML processes in place, which are needed. Chain analysis already does it, and the way they brag about on how much, laundered money that they found on chain, that's something that these guys just rather, be able to do it themselves. So I think that's, even though as scary initially as it sounds, regulation in the long run is a great thing. The other thing is that on the fund level, we've seen a lot of institutional interest, right? Institutional investors' interest. And all of them want to invest in DeFi or trade in DeFi, but they're just afraid of, that security. So.
And what is then the way to go there? How to make sure that they can enter the DeFi place?
So if it's a KYC pool, like most of the institutions, right, like Quant, I'm not going to talk about Jump because they're very active in the space, but they're just trading on the CME level. That just basically means like options, fully collateralized positions. But if they were to come and trade on, like, let's say, Open, it's a project on Ethereum, or, Eros Market, that's a project on Avalanche, also fully collateralized, but they know that their capital is going to be safe because, the pool is KYC and the trade, is monitored. So I think that's something that, most institutional interests would lie around. Eros Market, like I said, is, great innovative solution to options again, but, not regulated.
Okay.
And I want to second that point that you made, Ayesha, that there's a lot of institutional interests, right? And we were very fortunate to work with LedgerPrime at the beginning because they were willing to get their hands dirty with us. And, we were able to launch Hashflow just with LedgerPrime, but we talked to a lot of institutions, and a lot of people were like, yes, we're excited. Yes, this sounds great. Yes, let's do it. And then 2 weeks later, we're like, well, we talked to compliance. And I personally think regulation is great for this space because institutional money is going to be foundational to the financial system we're trying to build. Sure, this financial system is going to be great for retail traders, but these firms are going to sustain it. They're going to make it efficient and make it effectively sustainable in the future, right? So we want regulation because then all these institutions are going to feel comfortable. They're going to put their money in, they're going to put their engines to work, and they're going to make this world actually finally happen. So.
One thing I just want to say that, it's been a joke going around for past few months, but in DeFi, you've seen recycled capital, right? Like for past few months. It's funds like us, Genesis, QCP, that are basically keeping, these markets going on. So you do need that institutional trust to come in with like large set of inflows to get these guys like levels larger than Binance.
And how do you see then that impacting market making and the liquidity in the market? Will it only increase, or are there also other effects of more institutional money entering the market?
I think it would stabilize the market because, for someone like us, less arbitrage, less volatility. So it's going to stabilize the market, which is a great thing for the entire ecosystem. We're still a few years away from that, but I think like on the larger set, we're not going to call crypto as nascent as it is now, and we'll start calling it a bit more like mature of an asset class.
And if we would make the move to obstacles, let's picture the market in 2024. What are the obstacles for you for, let's say, making the, enabling the growth plans that you have? Do you see any obstacles in there, things that could block the way?
I mean, if you'll ask my CIO these days, is going to be like, it's pretty low volatile market these days because everyone is trying to figure out what's the next thing, but there's so much institutional interest, institutional capital lined up on the side. Then someone mentioned on the previous panel, which actually is very relevant, we don't have anything exciting coming up after as DeFi was, right? NFTs, yes, but then there's not really a trading strategy going around. You can buy and hold and like sell your ape tokens, but that's about it. DAOs, maybe, but then if that market becomes like bigger than what they're anticipating it to be, you're literally touching the LLC structures, which is not recommended. What's after? Like, I mean, crypto as an ecosystem is built on incentive models, which is trading, right? Like trading, making markets, trading in one form or the other. So what comes? Like, how do we mature DeFi? I think that's something 2024 would bring.
I'm also interested in how the technology is going to evolve because you see all these breakthroughs like chains like Avalanche and a bunch of other solutions in the space that have emerged, and obviously capital efficiency matters a lot, and believe it or not, speed of light is still a problem. Speed of light is basically the biggest nightmare of a dev in general. So bridging, for example, I think is going to be very, very important. Cross-chain solutions are going to be very important. We're doing a lot of research into this these days as well. But I think one of the biggest obstacles is that liquidity is a little bit segmented. It's really unclear what's going to stick. So people have their hands pretty much everywhere. And we need very, very stable and secure like chain interoperability solutions. So I'm curious to see how tech will evolve. One of the reasons I'm a huge fan of Avalanche is the fast finality. And one of the reasons this actually works really well for market makers is that in our case, it enables market makers to hedge their trades properly, right? Which in something like Polygon is almost impossible, right? Yeah. So curious to see what happens there.
Those are very interesting topics, because I heard technology, I also heard NFTs. And I think this is one of the weird topics, and also maybe in the room here, it comes to mind. So market making is typically high frequency, fast, algo related, lots of volumes, and NFT is a different world. But if you would close your eyes, and let's say it's picturing 2024, how would market making for NFTs look like? Does it exist? Do you see a role for yourselves in that?
So we have started seeing projects that are basically fractalization of NFTs, number one. The other is you borrow capital against your NFT, because we do have like individuals or funds or whatever that are holding these large sets of punks or apes or the larger, the high tradable NFTs. We've started seeing some like innovation around that. The other is market aggregator. There's a project that's working on that. As far as trading strategy goes, our team often makes a joke that maybe Q4 of 2022, they'll come up with a quant strategy of trading, these NFTs if there's enough volume there. But right now it's just buy and hold. So, love your ape, love your punk, love, whatever you're buying, because who knows where it goes.
I think there's definitely some science behind, like I'm a 100% believer in the fact that you can create quant style strategies for NFTs, because when you look at the blue chips, you're thinking about your Bored Apes and mutants and doodles and whatnot, and people look at things like floor prices, look at like floor prices for specific trades and so forth. There's definitely a game to be played there, and even for the smaller collections, you see things like spikes in volume. There's a lot of volatility. It's kind of like your favorite shitcoin that just gets like $100 million worth of volume in a day. And there's opportunity there, and I think people will get more versed in exploring those opportunities and extracting the value. Now, does Hashflow have a role to play in that? We'll see.
Okay,
It's 4 years from now, so.
That's an interesting answer. Maybe one of the, I think, 2 questions left from my end, and then is, so maybe back to one of the earlier topics, services, whatever, kind of. So 2024 again, what kind of services do you provide to the market, and how much is that different from today's offering?
I think we probably would see DeFi becoming like CeFi, and then another nascent market up and coming that would benefit like crypto native funds like us. That's one thing. The other thing is that we probably would see a lot more volumes on DeFi than CeFi, just because, like I said, on-chain settlement, faster transactions, and hopefully by that time, Victor talked about, multiple chains, cross chains. We have that technological hurdles crossed over. So like I said, like larger set of volumes. So we do see DeFi playing like a larger and the most important role for the entire ecosystem, like in 2024 and onwards.
Yeah, so similar here. I think that I'm hoping by 2024, DeFi will grow to the point that can actually impact markets in significant ways. And there are 2 features that I look forward to as DeFi gets closer to par. And one of them is cross-chain. I think cross-chain will become super important next year or 2. And the second one is derivatives. I think the derivatives market is very, very small in DeFi right now, and I think we can do a lot of work to make it bigger. So.
And then how do you see yourself making it bigger? Because, for instance, at Mathrix, we see that to help really the ecosystem, we should not only provide liquidity, but really help new projects, support them with our knowledge, make sure that people can come to us and that we can help them understand the market dynamics, advise them on how to do that. How do you see yourselves helping that ecosystem, making, for instance, derivatives bigger on DeFi?
Well, by working with some of the best derivatives players in the space.
Okay.
We at least hope to make them possible. It's really, really hard to trade, or close to impossible to trade derivatives on AMMs today.
Yeah.
But I think it's going to be very easy to do so on Hashflow. So we've been experimenting with that, and we'll at least make them possible in an efficient way, in a capital efficient way.
Cool. And I think we're getting close to the end of this panel discussion. And one of the key items was trend and obstacles. What are the trends and obstacles for the future and for institutional market making? Any trends that we have missed in this discussion that you would like to share with the audience?
I think so. Going back to derivatives, our favorite topic. Right now, we're only seeing options and perps.
Yeah.
We have started seeing 1 or 2 projects on interest rate derivatives. We have started seeing, the project building on Avalanche, actually, ETFs, decentralized ETFs. I think more and more traditional type of derivative products on DeFi, that's where a huge growth potential is. It's just that, right now we've just seen the lower hanging fruit, perps, which is often easier. We've started seeing a lot of interest around option wallets these days, which is very exciting. Multiple chains are doing it. Again, following a very traditional model, but it has volumes. So that's also up and coming. It started I would say about past 3 to 4 months or so, Waltz. So I think that more traditional type of products on the DeFi is where, the huge promise is.
100% second that. Yeah, a lot of structured products, a lot of people trying to create these very interesting things. And a lot of devs struggling to find the markets for them. So they're building the protocols, the tech, but they need markets. So.
Very cool. So I think those are the concluding remarks. Thanks for your participation. I'm looking forward to the future of DeFi and liquidity providing. And then thanks for your participation. And a warm applause for our guest for today.
Thank you so much for having us.